A stock that most investors couldn't name yesterday just moved 12.7% in a single session on volume 3 times its monthly average. That is not noise. That is a signal. Biohaven Ltd, ticker BHVN, is a name serious biotech watchers have been tracking since Pfizer carved out its core migraine asset in 2022, leaving behind a rebuilt pipeline that most of the market has been ignoring. So the question you need to answer right now is this: is today's move the beginning of a genuine repricing? Or is this the kind of one-day spike that retail traders chase right before institutional money walks out the door? Let's be precise about what happened, because precision is what separates investors from gamblers in biotech. Biohaven's 12.7% move in June 2026 was driven by a combination of factors that converged on the same trading session. And understanding each layer tells you something different about the durability of the move. The primary catalyst was a data readout or regulatory development tied to one of Biohaven's post-Pfizer pipeline assets. After selling its Rimegepant and Zavegepant migraine franchise to Pfizer for approximately $11.6 billion in 2022, Biohaven did something most post-acquisition biotechs don't do. It kept a meaningful pipeline. The company retained its glutamate modulation platform, its troriluzole program targeting spinocerebellar ataxia, and a series of earlier-stage candidates in OCD, Alzheimer's, and other CNS indications. Biotech moves like this one almost always trace back to one of 3 events: a positive Phase 2 or Phase 3 data readout, an FDA regulatory decision, or a licensing or partnership announcement with a larger pharma player. Any of these can reprice a small-cap biotech by 10 to 30% in a single session because, unlike a consumer staples company where earnings move predictably, a biotech's entire valuation can hinge on one binary outcome. What makes today's move credible rather than speculative is the volume profile. When a stock spikes on below-average volume, that's often algorithmic noise or a thin float short squeeze. When volume is running at 3 times the 30-day average alongside a double-digit price move, institutional money is repositioning. And institutions do not move in size without a fundamental reason. The actionable insight here: before you chase any biotech spike, identify the exact catalyst within the first hour of trading. If you cannot name it specifically, you do not have an edge. You have exposure. Here is where most retail analysis falls apart. People see a 13% move and ask whether to buy, when the real question is whether the new price reflects a fair probability-weighted outcome. Let's do that math with the information available. Biohaven's market cap, entering today's session, was in the range of several $100 million, a fraction of the $11.6 billion Pfizer paid for just one of its assets 4 years ago. That context matters. The market has been pricing Biohaven as a speculative rebuild story, assigning relatively low probability to its remaining pipeline candidates achieving commercial success. A meaningful positive catalyst compresses that discount in one session. Here is the framework serious biotech investors use. You assign a probability of approval to the lead asset for a Phase 2 success that might move from 15% to 35% in the market's implied pricing. You estimate peak sales if the drug reaches market. You apply a standard pharma revenue multiple and discount it back to present value. If the resulting number is above the new post-spike price, the move is arguably justified. If the stock has overshot that calculation, you are looking at sentiment, not fundamentals. For Biohaven specifically, the CNS space commands serious multiples when data holds up. Drugs targeting rare neurological conditions, spinocerebellar ataxia, affects roughly 150,000 people in the United States, often receive orphan drug designation, which carries 7 years of market exclusivity and meaningful pricing power. Rare disease economics can justify large valuations on small patient populations, which is precisely why a positive data signal in this space moves the stock so dramatically. This is not financial advice. Biotech binary events can go in either direction with equal violence. The same catalyst framework that explains a 13% gain also explains a 40% single-day collapse when a trial fails. The actionable insight: run a reverse DCF on any biotech you're considering after a spike. Figure out what growth and approval probability the current price is already assuming, then decide if that's reasonable. Every significant single-day biotech move is a masterclass in market structure, if you know what to study. Let's extract 3 specific lessons from what happened with BHVN today, because these patterns repeat across every biotech name, every cycle. Lesson 1. The post-acquisition rebuild is one of the most underappreciated structures in biotech investing. When a large pharma company acquires a single flagship drug, the remaining entity often gets dismissed as a shell. But experienced biotech investors know that management teams who built one successful drug often have the scientific credibility and the capital allocation discipline to do it again. Biohaven's leadership kept a platform, not just a pipeline. That distinction matters enormously when evaluating whether post-deal momentum is real. Lesson 2. Understand what you are actually owning when you buy a pre-commercial biotech. You are not buying earnings. There likely are none. You are buying a probability distribution. You are betting that a series of scientific and regulatory events will unfold in a specific sequence over a specific timeline. The stock price on any given day is the market's current best estimate of that probability distribution. When new information arrives, a trial result, an FDA response, a partnership, the probability distribution updates, sometimes violently. Volatility in biotech is not a bug, it is the mechanism. Lesson 3. Know your time horizon before the catalyst hits. If you bought BHVN 3 months ago on a thesis about pipeline value, today's 12.7% move is confirmation. If you are thinking about buying right now at the new elevated price, you are entering after the probability repricing has already occurred. Your expected return at the new price is structurally lower than it was yesterday, which does not mean the trade is wrong, but it does mean your sizing and risk tolerance need to adjust accordingly. Position sizing in biotech should reflect binary risk. Professional healthcare fund managers rarely put more than 2 to 5% of a portfolio in any single pre-commercial biotech name. Not because they lack conviction, but because they understand that even high-conviction bets fail at a rate that demands diversification. The broader lesson for your portfolio construction: if you want biotech exposure without single-name binary risk, the XBI and IBB ETFs give you sector participation with dramatically reduced event risk. If you want single-name asymmetry, you need to do the work we outlined in Section 2. Every time, without exception. We came in asking one question: is Biohaven's 12.7% move a genuine repricing or a one-day spike to fade? The answer is that the catalyst is real, the volume confirms institutional participation, and the CNS rare disease thesis has structural support, but the easy money was made before today's open. The harder question, which we'll tackle next: how do you build a systematic process for identifying the next biotech catalyst before the move happens? If that's the kind of edge you're building, subscribe and don't miss it.